Hi everyone, I hope you're doing well and making a success of what I really think is some kind of renaissance for day traders right now. I'm previewing the week ahead and specifically I'm taking a look at gold and whether the so-called death cross, that's when the 50-day moving average crosses below the 200-day moving average, means the gold price is set to fall further. And of course, I'll also be running down this week's economic calendar. GKFX Prime presents the week ahead. Let's take a look at the gold dollar symbol on the MT4 trading platform. I've highlighted the death cross with an orange circle, and you can see the 50-day moving average has nearly crossed below the 200-day. No strategy is perfect, but according to the textbooks, this is a bearish sign for gold. By the way, if you're getting some use from this video for your trading, please click that like button, and the YouTube algorithm will make sure more people see it, and we can keep making them. Right, let's run through the economic calendar quickly and then I'll talk more about gold. First up, on Monday there is Swiss unemployment and German industrial production, which likely slipped back slightly in December. Tuesday we have China trade balance data. Remember, this follows the record surplus reported last month. Wednesday is China CPI, German CPI and US CPI, as well as a speech from BOE Governor Bailey. Later in the week, a number of markets will close for the Lunar New Year. Then on Friday, we have industrial production and latest update on Q4 GDP from the UK. So, why are we placing any value on the death cross? Well, it's simply that many traders use the 50 and 200-day moving averages to define the trend of the market. The fact that the 50-day MA is pointing down represents the downtrend we've had in gold in the past few months. The 50 DMA crossing below the longer-term 200 DMA is a sign that the shorter-term weaknesses could last a lot longer. Then, if ever the 200-day moving average starts pointing down, we can define it as a bear market for gold. I should note, at the time of recording, the cross hasn't quite happened, but unless there is a sudden surge in the price, it looks imminent. A golden cross, when the 50-day moving average crosses over the 200-day, happened back on January the 22nd of 2019, basically 2 years ago. The last death cross happened on June 25th in 2018, so on that occurrence it was 7 months between the death cross and the golden cross. If history were to repeat itself, the next bullish golden cross in gold would happen in September this year. And what's the fundamental story? Governments and central banks have flooded the world with extra money, and that has devalued currencies. That's been a bullish thing for gold and could still put a floor under the gold price moving forwards. But, as we know, markets are always looking into the future, and it feels like gold has already largely priced in this money printing and deficit spending. Even if Joe Biden gets his next COVID relief package passed, that could have been priced in when gold hit over $2,000 for the first time. I suspect for gold to make the next leg up, we might need to see some real evidence of inflation from all the stimulus. That's probably once vaccines have been rolled out and the global economy recovers further in 2021. The other thing to look at is the dollar. If the dollar decline resumes, that's bullish for gold. But if USD has really bottomed, that's bearish for gold. Right, thanks everyone, good luck trading this week and make sure to subscribe to our channel so you don't miss next week's video.